How's it going, traders? Right, so a recap for the Bitcoin trade that I took today. And hopefully this is beneficial to anyone onlookers. I like to make these for my own journaling. And let's get into this. So what we were looking at was a board of assets today that was a bit tricky. We had markets that were somewhat overextended, you could say, already given the moves that came out of Asia and London prior to the Wall Street Open. So I trade the opening range. I'm looking for the breakout of the opening range, hence the name of the channel. Trade the orb. And what I'm doing is I'm combining a layer of analysis using the TPO profile, multiple time frame TPO profile, market profile, Dalton. All right. More on that for a different day. Alongside the Trend Predator Pro signals that are triggered when we have alignment of a trend across multiple time frames, bottom up, starting with the 8-hour chart. The 8-hour chart, because each session is roughly 8 hours, so we're monitoring the flow of the market on the day itself as per the sessions. So as you can see here, we've got the Wall Street session there, marked off by an orange high. And we've got, in fact, let's get to a cleaner chart. It's a bit messy like that with the TPO in the way. So there's London's range. This is Wall Street here. I've got it in replay mode, so let's get rid of that. Okay. So we've got Asia, London, Wall Street. So when I'm coming into the market, I'm already seeing how the day is set up, and the Trend Predator Pro helps me with that in any case, but across multiple time frames. But on the day itself, I can see that we're in breakdown at a glance, but the indicator also shows us that. So 8-hour. At this point, when we're opening in New York, we're inside of that level until we take the low here. We've just taken the low of that area, sorry. We've taken the low, we've come back inside, so that's bullish. So despite being bearish overall, and I'm looking for a bearish setup, there are prospects of a squeeze. And the indicator signals that because we've got 3 days and 3 sessions consecutively breaking down. All right. So today, yesterday, we had an inside day, and the previous day breaking down and so forth. So as you can see, we're in this strong bearish trend. We're still front side. So long as we're still front side of that trend, I'm not going to try and be clever and catch a falling knife, as it were, unless there's something that's just too obvious not to take. But ideally, what I'm looking for is to continue in this down channel. I'm looking to sell low, despite the majority of the market not wanting to do that. So as we come into the trading day, 10 a.m., I'm looking to see whether this low is going to hold. And I'm watching to see if traders that are breakout traders are going to take the plunge and assume that we head lower. And when we break last month's low, whether or not we'll stay below it. So if we get below last month's low, are we going to stay below that level and continue lower? Or are we going to break it and pull back and essentially trap traders, break down traders into the open? So that's what we're rolling up our sleeves for at this point. And what we see is we get exactly that. We get the market below the London low, below last month's lows, but then pulling back inside. So by being patient, And choosing to trade from 10 a.m. onwards, it allows for the market to set up. It gives us a fake out low, peak formation low in the open. That's traders that are trapped going short. And then what do? We come up and we trap traders going long. Trap traders going long because what do? We come back inside of the range. That's the Wall Street range there, the first half an hour, the opening range. And we not only do that, we actually put in a high, taking out the previous 4-hour high. So that's beautiful as well. So really nice. Exactly what I want to see. Fake out highs all over the place up here as well. So what have we got now? We've got a fake out low, fake out high, peak formation low, peak formation high. And then this market now that's putting in a topping pattern in our New York session. So that's the high of the session, topping pattern. There are prospects of a pullback before continuing. These M formations often see the neckline get revisited. So just be cautious of that. So we're just sitting on our hands in anticipation of a potential pullback. But this market breaks down again. So we've trapped traders short. Then we've trapped them long over here. We let them get out. And then we come back down. So we've got a topping in place. We've got trap traders already from down here stopped out potentially. And we've got the aggressive sellers back in again, still with some fuel despite being stopped out. Perhaps, who knows, but essentially we've got aggressive selling going on now. And we're just going to be patient until we break down the opening range. All right. And we just monitor to see if this price is ready to implode, melt, or if we're going to get some buying activity again just for a second check. Now this over here is our cue to get in. Of course, it doesn't come without risk, but it looks pretty decent, doesn't it? We've got a topping pattern, we've got this coil, we've got the pin bar up into the breakdown level of the opening range. So this here is an entry. We've got a criteria met. Below the VWAP, we've got a nice cross on the EMAs. There's nothing bullish about that. And we've got a market that wants to head lower. Now, just be cautious that we've got 3S on the chart. If it was on Wednesday or Thursday, I might be more concerned about that, but it's still front side of the market. This is still part of a 3-day cycle that's just getting going. Okay, so day 1, day 2, Monday, Tuesday, front side. No reason to trade it any other way at this point. We just go with the flow. And lo and behold, this takes off nicely. Now, it could have been a bit more aggressive with my stop loss, admittedly. I'm looking for a minimum of 2R, between 2R, 3R, but 2R is absolutely fine. It actually suits the account that I'm trading at the moment, and criteria for a payout, etc. Anyway, to cap it at 2R. And down here was the target, the ultimate target. So we're working a 3R target at this point. But we're leaving it at 3R, but what we're going to do is we'll plan this out. So when we get down to here, now this here is a 100% range expansion. So a 100% range expansion of the box. So just measure that down. You can just about see it. It's a bit faint on the chart, but it's a 100% range expansion. That's our first target. And it also aligns, if I recall correctly, let me just get the measuring tool on here. So it's a range expansion tool I've put together that measures the high and low of the inside days, the inside weeks, months, ranges for which I anticipate a range expansion. And if we look at this, the First target, okay, it wasn't the first target, I had a confluence. It was the second target. It was a 200% range expansion of the inside day that we're targeting, or thereabouts. And then we had a range expansion as well to consider. I'll just move this across to the inside week. Okay, so we've got a nice coil there. And when we get these coils, we see the breakouts, we can draw our measuring tool and look for the range expansion. So range expansion of that coil, a 100% range expansion, tallies up nicely with our target area. So we've got a confluence of a 200% range expansion of the box, the opening range, a 100% range expansion of the, 200% range expansion of the inside day, and a 100% range expansion of the inside week. So it's by no coincidence that the market came into here and reacted very strongly from there to the upside. So working our trade at this point, managing this, we were cautious at a 100% range expansion, and look how the market behaved when we got there. Again, by no coincidence. Okay, a nice strong rebound, and we're taking 80% off here for various reasons, but this could have easily come back up to us. So 80% off here and leaving 20 to run for the afternoon session, and it took its bloody good time to get there, but it did in the end. 1, 2, 3, yeah, several waves to get into there. And then this very strong reaction from that target point. So a pretty decent target and a very nice outcome for a Tuesday and pretty late in the day. And then we have it. Everything tallying up very, very nicely, like clockwork. Textbook perfect. Breakdown, fake out, double top, fake out high of the 4 hour. Strong bearish momentum in the market around the high volume impact area of the day. There's a beautiful fake out candle, switch bar, and a continuation of the same trend. All predicted by the Trend Predator Pro as we were taking out the lows of the prior month. A very nice signal. Didn't give us a quality in terms of stars because it's somewhat overcooked, and the Trend Predator gave us that heads up, so we're able to manage the trade relatively to the market conditions, and lo and behold, straight to target, and then a very strong rebound from there. But we were already out with our money and keeping it locked away.